Well, are you watching your credit score? It can play a huge part in how much interest you pay on mortgages, loans, insurance premiums. Simply Money's Amy Wagner is here with some mistakes to avoid so your score doesn't drop. I didn't even think about insurance premiums.
There's so much that's affected by your credit score, and so many people aren't thinking about it. Little decisions that you make along the way can have a huge impact on it. Now, the average American is actually doing pretty well when it comes to their credit score or their FICO score, the average being about 700 points, which is considered a good credit score. Perfect credit score is about 850. So if you're trying to get to that 700 score, or maybe that score in the 800s, a few things you can never do, and one of them is you cannot miss a payment. Now, how many times have one of us done this? Maybe you lose a bill or you forget to auto pay or whatever it is. All of a sudden, if you're 30 days late or more, your credit score could drop by 100 points or more.
What? That is ridiculous.
100 points. But here's what you can do. Simply Money's done a lot of research on this, and what we've kind of found out is your lenders, your credit card companies are really great about, if you're a good customer, call them. Call them anytime you have a late fee. See if they can take it off. More times than not, they will take that off, and it will have no impact on your credit score whatsoever, but you've got to make the call.
Okay, sometimes you're scared too, but you say don't be scared.
Don't be scared. Make the call. You will not regret it. More often than not, they will absolutely take that off of there. Now, your payment history is a big deal. Another common mistake, you're using too much of your available credit.
Okay.
So maybe you've got 2 or 3 credit cards and you've got $5,000 worth of credit available to you. You can't use more than $1,000 of that, no more than 20% of your available credit.
Okay.
This is your credit utilization ratio. That's the technical term for it. But essentially it means that if you have $10,000 worth of credit available to you, you cannot spend $10,000. That will make your credit score go down. So a couple of things you can do about this. First of all, don't spend too much, but second of all, don't close out those old credit cards. I can't tell you how many times I've been out in public and someone will come up to me and say, "You're going to be so proud of me. I close out all my credit cards. I've got no debt." Well, it's great that you've got no debt, but you have to keep those credit cards open. The credit history shows those companies that you have a long history of being smart and responsible with your credit. Also, if you're closing cards, that the amount of credit available to you is also going down, which affects that score again. So you've got to be super, super smart about that. Another thing is, for you parents out there, this is a really hard one. You cannot co-sign on a loan for your kids' college.
Yeah,
yes.
I've heard of that so many times.
Oh my goodness. I just saw a recent study that showed that parents who did that, more often than not, wish that they had, and it caused all kinds of issues in the family. But the thing is, you're equally liable for that loan. So your son or daughter, your grandchild doesn't pay for that, it's on you to pay, or your credit score absolutely tanks. Don't make that decision. Find other ways to help them. Maybe be proactive about finding scholarships and federal loans, but those private loans can really bite you. Never co-sign on those.
Yeah, we want to be close with family, am I right?
Yes, we want to be on good terms with family.
Especially mom and dad.
Absolutely, and these are the kinds of things that can really cause some major problems in a family, so don't do that. And our tip of the day, at Simply Money, there's an app that we love. It's called Digit, but they're starting to charge for it, $2.99. So we did some research, found some free options for you, one of them being tip yourself. So every time you go to the gym and work out, or maybe you skip Starbucks, you move the money into your savings account out of your checking, you tip yourself, all of a sudden you've got a nice little bonus, maybe for to go shopping, to save for retirement, maybe to go on a trip. And Capital, it's spelled with a Q. Also the same thing, you can set it up to kind of hook yourself up for different things.
This is great.
Yes, both free apps. Don't pay for this, but definitely find something like this. It'll help you with your savings, give you a boost.